It is time now for our financial advice slot. And joining me now is Tommy Corbett from Carey Corbett Financial Solutions. Tommy, how are you?
Morning, Alan.
Good morning to you. 086 1800 964 if you have any questions for Tommy, apart from asking him for a few bob, okay? That's just off limits. We're going to talk about mortgages this morning, though, Tommy, and getting mortgage ready. I know from personal experience there's so much involved in getting a mortgage. So some advice for people who are on the very start of this journey.
Yeah, so we would do quite a few mortgages in work, and one of the things we see predominantly really is people coming in and they're not mortgage ready, and we kind of maybe give them a 6 to 12 month period to kind of get mortgage ready. And this is just kind of some of the stuff really that we would see on a daily basis in relation to clients coming in.
And that even tells you like a half a year to a year is what you need to really make sure your ducks are in a row.
Yeah, and some people come in and they're fine, they're all ready to go, and they have that done. But an awful lot of people are really just at the very start of the journey, and they've only maybe talked about it over the weekend. They said, you know what, we'll go and talk to someone and see exactly what we have to do, and then we put a plan in place maybe for the next 6 to 12 months that they are mortgage ready then when it comes to actually applying to the various banks that are out there. And
I mean, this isn't just a plug for you, but I think it is important, isn't it, to speak to somebody at the outset of the journey, because particularly if it's your first time, you're looking to get your first home, there is so much involved with a mortgage that you just wouldn't be aware of, even if you're doing a bit of investigative work yourself. Yeah, and we are mortgage brokers, and there are other mortgage brokers around there, you know. So I would always say go and talk to an independent mortgage broker, because they will see things that you may not see. They will see things what the bank will look for, what the bank doesn't like, etc., and they'll put you in the right direction, you know. So an awful lot of people have come to us and they've been to their own bank and have been declined a mortgage, and then it's only a small maybe tweak here and there to get them over the line, maybe with a different lender. So it is important that you get the story straight from the outset if you can at all. Okay, so I suppose important start is getting a clear budget. Yeah, and I suppose this is kind of a little bit like the horse before the cart is in. You know, how do you know how much you can actually borrow? So listen, a rule of thumb is, generally speaking, 4 times your salary. All right. So, for instance, if you have a joint salary of 100 grand, you know, you're looking at a maximum loan of 400,000. So that kind of gives you, you know, a ballpark, you know. Now, a lot of people will say, well, I'm saving X amount and I'm spending this amount on rent, and therefore I should be able to afford a repayment of X amount. But that will really be dictated by a number of different factors. So what you may think you can afford may differ greatly from what a bank is actually willing to lend you. Of course, a huge part of a mortgage is the deposit. You have to pony up some cash yourself. Yeah, not as bad as it was before, as in it's 10% for first-time buyer, but it's also now only 10% for second-time buyers. So before it was second-time buyers had to come up with 20% of the actual purchase price, so it's 10%. Now, again, that can be gifted. Okay, but again, only in certain circumstances will they take a gift into account. You have to say where the gift is coming from and that kind of thing. But yeah, you have to make sure that you actually have 10% wherever it's coming from. Doesn't really matter. But yeah, it's 10% deposit minimum. Okay, in terms of repayment capacity, you need to show that you're in a strong position to be able to repay. Yeah, and this is one that, again, we will come across, you know, from time to time, where people may have a very good income. They may be getting a gift of the 10% deposit, and they're wondering why they can't get a loan. And basically, they haven't demonstrated that if they get this mortgage, that they have the repayment capacity to pay that on a monthly basis. What that means, basically, they're on good incomes. The next thing you find out, they're going on 4 holidays a year, they've nothing saved, so they're not renting, etc. So basically, a bank will want to see that, you know what I mean, if your mortgage is going to cost you €1,000 a month, you're either saving €1,000 a month, you're paying rent of €1,000 a month or more, or a combination of both, or that you're paying a loan that maybe finished in the next couple of months. So there has to be a demonstrated repayment capacity there. And Tommy, of course, another important element is having a good credit record, one that doesn't have any red flags or sound any alarms for the lender. Yeah, again, probably don't come across it as much as we did in the past. You know, around the time of the financial crisis, there was very few of us without I suppose a black mark against our credit record. But, you know, again, your credit record takes 5 years to actually clean up. And that's from
when you actually sorted it out. So if you only sorted out your credit record in 2022, it's really probably 2027 before you'll actually be able to apply for mortgage. Now, every case is different. So if it's, for instance, you know what I mean, if there's a special circumstance, you may have gone through a divorce or a separation or whatever it's time, banks will take it on a case-by-case basis, but the general rule is that your credit score or your credit record, it takes 5 years for it to kind of wash out.
That just shows you really have to lay down the groundwork well in advance. What else is important for people to be aware of in getting mortgage ready?
Yeah, again, in relation to your employment and your income, if you're on contract, banks generally tend to like to see that you're on your second contract. It depends on the type of contract. It depends on the type of work you're in as well. And an awful lot of people are on contract work now, particularly on the IT side. So again, generally speaking, they like to see that you're on your second contract. Don't be relying too much on overtime or bonuses or commissions. They will only take a certain portion of that. So you may have a very good income from the previous year, but if a lot of that is made up of bonuses or commissions, they may not take it all into account, or they may only take some of it into account. Getting your paperwork ready, again, if you talk to a mortgage broker, they'll give you the list of things to get, and my God, it's a big list. So for your bank statements, your credit card statements, your loan statements, all that sort of stuff, along with your ID and all that kind of thing. Again, if there's issues in relation to your banking, so for instance, if you tend to be going into overdraft, you tend to have maybe a couple of referral fees, maybe you've had a bounced direct debit or something like that, you need to kind of tidy these things up again for about a 6-month period, because that's what a bank will look at your bank statements first. So they will look to see, you might be doing everything perfectly, you might be saving X amount, but just you might be a little bit untidy in relation to your day-to-day banking. And
the tidiness or otherwise of your day-to-day banking, those kind of things you mentioned, referral fees and all that, are understandable. But would a bank look out for things like, I think it's something you've mentioned before, if there's like money that's going to bookmakers or something like that, or if they see little regular withdrawals or money going for frivolous things, you mentioned the cup of coffee and things like that. I don't know how much that features.
Not so much the cup of coffee, but definitely gambling. Now listen, if it's a couple of bets or on Cheltenham or Aintree, it's not a big deal, but if it's a regular direct debit to one of the bookmakers, etc., or whatever, they will.
That's of concern.
Yeah, they won't look at that too kindly. Again, we've seen applications being declined because of a certain transaction going back maybe a number of months ago where there's $2,000 got out of the account. Yeah. Don't know really what it's for, but actually when you go and Google it, it's for a casino somewhere. Do you know what I mean? So those kind of things where even we wouldn't know what it's going, we wouldn't have spotted it when we actually do the review of bank statements ourselves, a bank will pick up on it.
Yeah, so the bank will be doing their homework on the person looking for the mortgage, Tommy, but the person who's looking for the mortgage should be doing their homework on the potential lenders as well. See who can offer them the best deal, who's more likely to work with them or be accepting of their particular circumstances.
Yeah, absolutely. And there are loads of different rates out there, and depending, you have green rates, which is basically you get a favourable rate if your BER rating of the property that you're buying is above a certain level, that kind of thing. Even although there's loads of rates out there, it's very important that you go and talk to someone in relation to it, because they'll give you the ins and outs and the advantages of going variable versus the disadvantages, etc. How long you should fix for, if you should fixed, are there penalties for paying off a fixed rate early, all that kind of stuff, you know what I mean? So you've lots of different rates out there, you've lots of different banks out there. It's a little bit more competitive now than it was maybe 4 or 5 years ago. There are 1 or 2 more banks on the market. So again, if you can talk to someone that's independent that deals with them all, get that view is what I would say.
Okay, also important to make sure you have the ability to walk before you try to run. So if you are looking at houses, before you start off on that path, make sure you have the backing. Yeah,
so approval in principle. Listen, no auctioneer will talk to you, no estate agent will talk to you unless you actually have approval in principle. At the very least, a lot of them will even, ensure that, will want to see that you have full approval, so again, there's no point in walking into an estate agent and bidding on a property unless you actually have approval in principle. So that's your first step, really, Again, the other thing is plan for all costs. So there are extra costs there, so think about your legal fees. You might need to get an engineer's report, evaluation fee, those kind of things. There may be specialist reports out there that you may need to do if you're buying obviously maybe one of these derelict houses, all that kind of stuff. So plan for all those extra costs.
Yeah, really, really important. Good to flag up for people as well, things that they may be given the thumbs down for. You were talking about controlling day-to-day banking behaviour and the kind of things lenders don't want to see in an account. What are some of the other common reasons that your mortgage application might be declined?
Yeah, and we've kind of covered some of them already, like your credit history and that, but maybe too much existing debt. So you may have a credit card, you may have a car loan, you may have a personal loan from a holiday or whatever, and even though you kind of are making you are, I suppose, fitting the criteria, they may look at that and say, listen,
element of doubt,
maybe pay off one or two of those little loans or whatever, and then come back to us, that kind of thing. The deposit source can also sometimes be unacceptable. So again, fine if it's a gift from a parent or something like that, but if it's a deposit that's just landed in your account, you're going to look for where did it come from, all that kind of stuff. So there's a lot of money laundering issues there and that kind of thing. We said it already, repayment capacity isn't proven. So again, you may have everything. You may have the good job, the good income, you may have the gift from the parent, but you haven't been saving that income, you have been spending it all along. So repayment capacity is a big thing for them now. As I said, poor bank account conduct. One thing, maybe another thing that comes up every now and again is where you have had a couple of credit applications. So when you do a credit check, when you look at the credit report, you can actually see if someone has actually made applications to various lenders, in the recent past. So you could see, you've made 3 different applications to various lenders. Why have they been declined? So it is.
That is of concern as well. If a lender sees 3 previous applications, then they'll kind of go,
what are we missing here?
What was the issue there?
Yeah, what are we missing here? So it is very important that you get your ducks in a row before actually making and listen, you could end up going to 2 or 3 different lenders, but generally speaking, they don't like to see that. Inconsistent paperwork, obviously. Do you know what I mean? That again, if you're asked for 6 months bank statements, you're bringing 5 months, that kind of stuff. You know what I mean? So you're not going to get away with.
And it is understandable to a certain extent, Tommy, because there is so much paperwork involved with a mortgage application. But if you're getting yourself into this, and it can be frustrating, but as you say, if you're told to go looking for this stuff, just make sure, because you have to do so much of it, that you do it right. Yeah. So you don't have to do even more by going back and trying to fix what you'd made a mistake on, or a particular oversight.
Oh, absolutely. And the bank will not miss out on anything. So there'll be a list there, like I said, your bank statements, your credit card, your loans, all that sort of stuff. And if anything's missing, what'll happen then is it'll delay the whole process. They'll come back to you. You'll go back to the end of the queue then. You know what I mean? Until you get all the information.
You're waiting even longer then.
Yeah, so you're as well off to get it done properly from the outset.
Some of what you spoke about was in relation to, if you're just building a place or rebuilding a derelict property or whatever it might be, the potential issues with a property are important to be cognizant of as well.
Yeah, so again, everything will be on fine. You might get the approval in principle, you might get full loan approval, and then they will look for a valuation, and something may show up on the valuation. It could be subsidence or something to do with the property. I've seen it down through the years, maybe there's something wrong with the roof or whatever, and a lender then is not going to lend against a property that they're not sure that it will hold its value into the future. So again, property would be the thing again, but that's a good thing to know anyway. So the last thing you want to be doing is buying a building that isn't.
If you have subsidence, you really want to know about that.
So we would always encourage anyone that's buying a property, get an engineer's report. It'll cost you a few quid, but at least you have that little bit of certainty then that everything is okay and that. So it's a huge investment. We can all see the price of property, what houses are making now. So an engineer's report is something that I would encourage everyone to do.
Yeah, it's certainly a small price to pay in the overall scheme of things if you end up having a successful mortgage application. Anything else you want to highlight or mention, Tommy, before we finish?
No, I think that's more or less it. As I said, if it was me, I would encourage people to go to a mortgage broker, just to get a feel of where they are. A lot of times they'll come and they'll say, listen, you're not anywhere near ready, you need to do X, Y and Z. Sometimes they'll come along and they'll be ready to go that day kind of thing, so go and talk to someone that's independent, that can deal with the various lenders on the market. They will put you in the right direction in relation to how to apply, what's involved, all that kind of thing. Okay, you mentioned the word market there. I don't know if the markets is something you want to touch on, or will we chat to you about that next time you're in? Yeah, no, I was looking at them. It has been a pretty volatile month. However, they're still in positive territory. So the MSCI World Index, which is basically the world index of all publicly listed shares, are in positive territory, around 1.6%. S&P 500, which is the American stock market, again in positive territory, 1.1. Japan is up quite substantially, about 8% year to date. Gold is up 14.5% this year, and it took a hit a couple of days ago, but it has kind of bounced back since. So gold is flying, oil is up 10%, copper is up 7.1%. You know what I mean? So a lot of volatility there at the moment. We've always said, if you have a pension, if you have an investment, you don't panic when things go down, you don't get too excited when things go up. There's going to be a lot of volatility there while our friend in the States is in office.
I was just about to say, don't worry, 2029, end of 28 and start of 29 will come soon enough.
Well, that remains to be seen.
It remains to be seen. Yeah. Oh God. We'll park that one there. All right. For the moment here in February 2026, Tommy, thank you very much.
Thanks, Alan.
If you ever have any questions for Tommy, 086 1800 964.